Wall Street ended a turbulent week on a mixed note, capping off days of relentless volatility and uncertainty that left investors and analysts alike searching for answers. The mood on the trading floor was tense, with every tick of the market watched closely, and every headline from Washington sending ripples through the financial world. This Friday, November 7, 2025, marked the end of a week that many on Wall Street will not soon forget. Each day brought new challenges, and by the time the closing bell rang, the sense of exhaustion was palpable. The ongoing government shutdown, now stretching into its second month and officially the longest in U.S. history, has fueled market anxiety and left investors without crucial economic data. With federal agencies shuttered, key reports on jobs, inflation, and growth have been delayed or canceled, leaving a gaping hole in the information investors rely on to make decisions. Major indices swung wildly as traders reacted to every rumor and whisper from Washington, D.C. The lack of reliable data meant that even the smallest piece of news could trigger outsized moves, amplifying the sense of instability. The Dow and S&P 500 managed to eke out modest gains after a late-session surge of optimism about possible breakthroughs in congressional negotiations. Hopes that lawmakers might finally be nearing a deal to reopen the government gave some investors reason to cheer, if only briefly. But the Nasdaq closed lower, dragged down by persistent weakness in tech and AI stocks. Concerns about regulatory scrutiny and slowing growth in the technology sector weighed heavily, erasing earlier gains and leaving many investors disappointed. All three indexes posted weekly losses, underscoring the toll that political stalemate and uncertainty are taking on investor confidence. The red arrows on the boards told the story of a market battered by forces beyond its control. The lack of government economic reports has left analysts and even the Federal Reserve in the dark, heightening uncertainty and making it nearly impossible to gauge the true health of the economy. Without data, speculation and guesswork have filled the void, making markets even more unpredictable. Political drama, not corporate earnings or global trends, drove the market's mood this week. Every development on Capitol Hill was dissected for clues, and the usual focus on business fundamentals took a back seat to the latest twists in the shutdown saga. Investors are weary, and the market's choppy performance reflects their frayed nerves. Many are simply hoping for a return to normalcy, but with no end to the shutdown in sight, anxiety remains high. The big question now is how much longer this uncertainty can last before causing deeper, more lasting damage to the markets and the broader economy. As Wall Street braces for another week, all eyes remain fixed on Washington, hoping for a breakthrough that will finally bring some much-needed clarity. This week's trading was nothing short of a wild roller coaster, with markets lurching from optimism to panic and back again in a matter of hours. Investors braced themselves each morning, never quite sure what the day would bring, as headlines and rumors sent shockwaves through the financial world. Daily swings rattled even the most seasoned investors, as sharp drops were followed by sudden rebounds, only to be reversed again. The mood on trading floors was tense, with every new development sparking a fresh wave of anxiety or hope. Early in the week, pessimism over the looming government shutdown sent the Dow and S&P 500 tumbling. Fears grew about the potential impact on the broader economy, with many investors scrambling to adjust their portfolios in anticipation of prolonged uncertainty. Tech stocks, which had been market darlings for months, faced especially sharp sell-offs. AI companies, in particular, saw their sky-high valuations come under intense scrutiny, as investors questioned whether the recent surge was sustainable or just another bubble waiting to burst. The Nasdaq led the downturn, suffering its largest weekly drop since March. The tech-heavy index became a symbol of the week's volatility, with losses mounting as confidence in the sector wavered. But by Friday, a glimmer of hope emerged. News of possible progress in the Senate sparked a dramatic late rally, pushing the Dow and S&P back into positive territory for the day. The mood shifted almost instantly, as traders seized on any sign of resolution. The market's desperate search for any sign of resolution was clear. Every headline, tweet, and rumor was dissected for clues, as investors tried to anticipate the next move. Despite the late-week rebound, all major indexes still finished the week lower. The damage from earlier losses was too great to overcome, leaving many portfolios in the red. The tech sector's struggles only added to the gloom, highlighting just how fragile investor confidence remains. For many, the week was a harsh reminder of how quickly fortunes can change in today's unpredictable market. A single glimmer of hope can trigger a rally, but the damage from the shutdown and ongoing uncertainty continues to cast a long shadow. Investors are left wondering if the worst is over, or if more turbulence lies ahead. In the end, uncertainty remains the market's biggest enemy, keeping everyone on edge and making it clear that the ride is far from over. The U.S. is now in its longest federal shutdown ever, driven by a bitter funding dispute. At the center, Democrats demand ACA health insurance subsidies, while Republicans refuse, creating a deep stalemate. President Trump, frustrated by the shutdown's fallout, has pressured his party for a solution, even suggesting scrapping the Senate filibuster, an idea quickly dismissed. Talks have stalled, with both sides refusing to budge. Behind the scenes, a bipartisan Senate group is working on a smaller spending package to fund key agencies. This minibus wouldn't end the shutdown, but could be a first step. The urgency is growing, with Senate leaders hinting at weekend work to break the deadlock. The nation waits for a breakthrough. The shutdown has triggered a dramatic plunge in consumer confidence. The University of Michigan Sentiment Index hit a 3-year low, signaling widespread anxiety about the economy. Households are worried, and spending could slow. Bad news for growth. The survey's measure of current conditions hit its most pessimistic reading ever, reflecting the shutdown's real-world impact. Consumer sentiment has dropped nearly 30% since last November, with the shutdown accelerating the decline. When faith in leadership falters, people spend less, dragging down the economy. Investors are watching closely, as weak sentiment often precedes lower corporate earnings. The risk: a negative feedback loop where political chaos hurts confidence, spending, and markets. Tech, especially AI stocks, took a beating this week. The Nasdaq's sharp drop was driven by a sell-off in high-flying AI names, as investors questioned whether sky-high prices were justified. The shutdown's uncertainty made investors less willing to bet on unproven future growth. Speculative stocks were the first to go, triggering the Nasdaq's worst week since spring. The sell-off echoed memories of the dot-com bust, forcing a reality check on which AI companies have real business models. Tech's slump is a problem for the whole market, as it's been the main driver of recent gains. If big tech falters, what will take its place, especially with the shutdown clouding every sector? The AI reckoning is here. Late Friday, as darkness settled over Washington, a glimmer of hope began to emerge. Reports started circulating that the Senate was making real progress toward ending the government shutdown, which had cast a long shadow over the nation for days. The mood on Capitol Hill shifted, with lawmakers burning the midnight oil in tense, high-stakes negotiations. Outside, the press corps gathered, eager for any sign of a breakthrough that could bring relief to millions of Americans affected by the impasse. News soon broke of bipartisan talks centered on a so-called minibus spending package, a smaller targeted funding bill designed to reopen key parts of the government. This development sent shockwaves through financial markets, which had been battered by uncertainty all week. Suddenly, the mood shifted from despair to cautious optimism as investors and analysts digested the possibility of a deal. The Dow and S&P, which had spent most of the day in the red, staged a dramatic rally in the final hour of trading. Traders on the floor erupted in cheers as the indices surged into positive territory, reflecting renewed faith in the political process. For investors, this was more than just a market move. It was a signal that lawmakers might finally be willing to set aside partisan differences and work together to restore stability. In trading rooms and offices across the country, people watched the news unfold with a mix of hope and relief. The swift rally underscored just how sensitive the markets are to every twist and turn in Washington. Each headline, each rumor, seemed to send stocks swinging wildly, as investors tried to gauge whether a resolution was truly within reach. Yet, for all the optimism, the situation remained precarious. The deal was far from finalized, and the House of Representatives wasn't even in session to consider any agreement. Lawmakers left the Capitol late at night, knowing that much work remained. The late-day surge in the markets was driven by hope. Hope that compromise was possible, that the shutdown might soon end. But hope, as investors know all too well, is no guarantee. The market's reaction was, in many ways, a vote of confidence in the ability of Congress to find common ground. But that confidence is fragile, and could evaporate just as quickly if talks break down or new obstacles arise. For now, the shadow of the shutdown still looms large over Washington and the nation. Many government offices remain closed, and uncertainty continues to weigh on families, businesses, and federal workers. The next few days will be critical. As the clock ticks and pressure mounts, all eyes remain on Capitol Hill, waiting to see if this glimmer of hope can finally break the deadlock and bring the shutdown to an end. The shutdown's impact goes far beyond Wall Street. Hundreds of thousands of federal workers are furloughed or working without pay, struggling to cover basic expenses. The Senate's failure to guarantee back pay has deepened their hardship. Air travel is being disrupted as the FAA cuts traffic at major airports due to staffing shortages. Social safety net programs like SNAP and Head Start face funding chaos, threatening millions. Even the legal system is caught in the fray, with judges intervening in partisan disputes. The shutdown is harming the most vulnerable, disrupting essential services nationwide. The true cost is measured in real lives, not just market numbers. Market experts agree, the shutdown is hurting the economy and the market. Terry Sandven of U.S. Bank says ending the impasse would boost sentiment and let investors refocus on fundamentals. The data blackout is a major concern. Without key reports, the Fed and investors are flying blind. Ryan Dietrich of Carson Group warns, this uncertainty makes sound policy decisions nearly impossible. The longer the shutdown drags on, the greater the risk to consumer and business confidence. What started as a short-term worry is now a threat to long-term growth. Experts urge Washington to provide certainty. Markets can handle good or bad news, but not endless limbo. Until there's a resolution, volatility will rule. The message clarity is desperately needed. As the week ends, all eyes are on Washington. Hopes for a Senate breakthrough offer a sliver of optimism, but uncertainty dominates. The key question, can a bipartisan deal be reached, and will it pass both chambers? Pressure is mounting as economic data worsens and public frustration grows. The Senate may act over the weekend, but the House remains a wild card. For now, the market and the nation are in limbo, waiting for leadership to break the gridlock. The week closes with cautious hope, but everyone knows how quickly it could fade. The economy's fate rests with a handful of politicians. The waiting game continues.